Bull market or bear market after all? That's obviously the crucial question here, and we're facing this decision right now with Bitcoin or in general in the crypto market. While the traditional markets have reached new all-time highs, they're also currently experiencing significant delays. Everything is correcting. The crypto market, but especially the traditional market, has lost a lot of capital since last week, particularly since Jerome Powell's speech. Let's take a look now at what's going on and what will happen next. But before we continue, friends, as always, leave a like and a comment. That really helps me a lot, and it would definitely be super nice of you. Let's talk about Bitcoin in the short term. I had marked this support zone for you, which we actually briefly surpassed in the short term. And because we were above it here, I thought, okay, that looked pretty sustainable, especially when you look at it on the 4-hour chart. It really seemed like we had definitely found resistance here and then broken out again. That looked pretty good to me, and at that point, I was leaning more toward us seeing the $121,000 mark, but that wasn't the case. We crashed back down here again, especially dropping below the $117,000 mark, retested it once more, and then we picked up this CME gap down here. And in this regard, my assumption was a bit off. My assumption was more that we would pick that up, but I also told you that if we fall below here, and especially if we drop below the $117,000 mark, we'll go lower first. Nevertheless, the primary scenario I had envisioned didn't play out that way. And that's not a big deal, especially in trading. Many traders always have the problem that they can't admit when a trade didn't work out. I have absolutely no problem with that. We'll just move on to the next trade, the next chart. I did have different tendencies, but you can't always be right. But I also have no problem admitting that to myself. Now what's interesting is that on a larger scale, let's switch back to the daily chart, we've picked this up here. We've picked up this zone here, and as I mentioned back then, we found support right at this level, where we've now established a really nice support zone. At $112,000 we found support, and since then we've bounced nicely back up. What also comes into play here is that we briefly dropped below the 50 EMA on the daily chart, but managed to fight our way back above it, which is extremely important. We also fell below the 25 EMA. Right now we're stuck exactly in between here. This is where it gets interesting, because ideally the best thing would be if we could fight our way back above the 25 EMA as well, and from there see the next upward trend. But the fact that we've already found good support at the 50 EMA is very positive, because as you can see, every time there's an uptrend, we're clearly above the 50 EMA. That's why this should happen again quickly right now. At the very least, it would definitely be sustainable and quite good. Otherwise, I still tend to think that we can reach the $121,000 mark, especially since we currently have a lot of liquidity here at $119,000. So I'm pretty sure that we can head towards $119,000 in the next few weeks, simply because there's a lot of liquidity there and because we have a major overarching resistance zone here, and the next one up would then be at $123,000. What could happen now is that we simply enter the next sideways phase of this cycle, because as you can see, we've already worked through a lot of support zones and resistance zones. Take a look at it. We've been fighting around this area the whole time. Same thing here, up, down, constantly in this sideways phase, and down here it's exactly the same. Built a top, then we had this sideways phase. And that's just a bit different in this cycle. In the past, we broke through here in one go. This time, that's not the case. We simply have several zones where we just get sideways phases. And in this cycle, that's how it is. It simply has to do with how Trump is handling the global economy. Because in this cycle, Trump is president again. In the last cycle, Joe Biden was president, and you can see how that turned out. It escalated all at once because we had immediate QE, an extreme amount of money came in due to the whole COVID thing, and so on. In this cycle, it's different, which is why we're climbing up in steps. But when we had Donald Trump as president back in 2017, it was actually exactly the same. Take a look at it. We also climbed up in steps here, bit by bit, until the final really big run came. It was exactly the same during Donald Trump's last presidency, which is why I still tend to think that way. Especially when we look at the Bitcoin chart here, I believe overall that this is our bull run target. I'm so sure that 150 to 200k is an easy target for Bitcoin. We could even actually go above 200,000, but let's speculate on that first. But what's really crazy here is if we take a close look at this part, this uptrend, if we look at this section, then it gets interesting because I've copied this part and placed it over this zone here, and just look at what exactly happened here. It's actually not hard to see. I copied this zone here, and we can see that we had a double top here, then another sideways phase, and after that the big upward swing. Here it went up, formed the double top, corrected a bit, sideways phase, and then the really strong breakout. That's how it was in this example, and you can currently replicate this exactly on the chart. And accordingly, we still tend to believe that we are experiencing a larger, overarching uptrend, but especially that August and September might still be a bit more corrective. And what I find pretty funny is that 4 days ago, at the end of July, I told you, sell in August. The comments under the video were terrible. I got hated on again here. One person said, August right, that really paid off. You just don't get it. I told you I was expecting a correction in August. 4 days later, look at what happened. We had this big correction. Now suddenly no one is saying anything anymore, and I always find that a bit of a shame. When I end up being right, suddenly no one gives me credit, but before that everyone was hating again because they didn't expect that we would actually see a correction here. But this correction we've seen so far, it's still pretty normal, nothing out of the ordinary. There's definitely still a chance that we could correct down towards $100,000. That possibility exists, but let's wait and see. That would only happen if we were to drop down here. The question that many people are asking is, what has actually changed here? Because we had the meeting last week with Jerome Powell from the Fed, and in the end his speech was quite interesting. But what you have to say is, in percentage terms, our prospects for future rate cuts have only improved. There is now an 80% chance that we'll see the first rate cut in September, which is actually very, very good for the market. We can also see clearly on Polymarket that since the speech, we've become much more optimistic about a rate cut. People know or are absolutely leaning toward the expectation that we'll see a rate cut in September, and accordingly that's actually pretty good. So basically nothing has actually gotten worse here, yet the markets reacted negatively. Why did they react negatively? Because it was simply a sell the news event. Rate cuts have become more likely, people sold off, and that's just how the market works. It's basically exactly the same, just the other way around. Here we had our bottom when Trump held up that board with the tariffs. So on the day when the worst news in the world came out for the markets, we saw our bottom. We didn't correct any further after that. No, that was already the bottom. Exactly the opposite. What, for example, was the top here? The halving. When the news eventually becomes extremely positive, we get closer and closer to the top, so you have to think a bit counter-cyclically here. Jerome Powell's news was positive. Nevertheless, we corrected, simply because it was overdue, because we just had to correct here again. The market makers initiated it, but it's really not that big of a deal. I mean, what happened here? Retail investors sold once again while the big players were busy buying in. The big players continued to buy Bitcoin and Ethereum even at these prices. Just because we had poor unemployment numbers, we saw this crash in the traditional markets, but also in Bitcoin. The advantage, however, is that there is a 90% chance we'll see the first rate cuts in September. So it's pretty much certain that we'll see the first interest rate cuts in September. So looking at it on a weekly basis, everything here is still positive. In the same way, you just have to understand that although we had this upward trend in Bitcoin and open interest really shot up, we now had this correction which was simply a completely normal part of it. The advantage is that we've now briefly gone negative again with the funding rate. This is very important because it means that a lot of leveraged positions have been cleared out of the market, allowing us to rise much more sustainably in the long term. Because the funding rate always indicates how strongly we're leaning in one direction or the other. That's the fee you pay when trading, whether you go long or short. And when too many people go long, you can see how this funding rate gets way out of hand. And the more extreme it gets in that direction, the higher the likelihood becomes that the market makers will step in and push us back down. And that's exactly what just happened. That means we've now removed a huge amount of selling pressure. The funding rate has even slipped back into negative territory, which means we now have room again for the next upward trend. I mean, just take a look at this. With Bitcoin, we've broken through this massive zone that has predicted the top for the past 8 years. We've now retested it, and we can keep moving forward. Because overall, we see that money is still being printed in the global economy. A lot of liquidity is still flowing into the markets, and we can feel that in the crypto market as well. Because as you know, we follow the M2 money supply with a delay of about 12 weeks. And that's exactly what has happened again now. Here we can clearly see that there was also a correction in the M2 money supply, and that's why we've had a small correction in Bitcoin during this sideways phase. But according to the chart, starting now, so from today, we once again have the opportunity to continue following the M2 money supply until around September 27, because it's only from then on that we enter another sideways phase. And at this point, you just have to say, maybe that was already the correction I was expecting in August. However, there is still a possibility that there could be another larger correction, meaning towards $100,000. But maybe that was already it. You just have to put it that way at this point. But we saw it, and I announced it beforehand. That's all I wanted to do here. And with that, I'd like to thank you very much. Can you hear it already? Leave a like and a comment on the video, and see you next time, friends. Ciao.